Hello traders, it's Samurai Trader here. Welcome to this session. We're going to be looking at a number of trading opportunities that have presented themselves the last few days on ES, CL, the NQ, all three futures markets of course, and we'll look at a forex market, the euro dollar. I'm going to be covering a couple of questions that I'm commonly asked by traders virtually on every trading day. For an example, one of the questions I receive is how many setups or strategies should I learn, should I master? In the Day Traders Fast Track program, I teach you around 12 different strategies, but as you'll hear me talk and say on a regular basis, is become a specialist. You only need to master 1 to 4 of these setups to have an incredible career as a day trader. Well, why teach you so many strategies? Well, as time goes on, you'll choose or you'll decide to start taking counter trend trades. Of course, as you hear me promote, you only start counter trend trading once you're consistently profitable as a trend trader. So it just gives you, if you like, more tools in your toolbox to use at various times. But I really want to promote here, traders, is become a specialist. That is, trade one market only. If you're a day trader, that is, trade one market only with multiple strategies, maybe 2 to 4 maximum strategies. On the other hand, if you perhaps become a specialist at say the 34B, which we'll have a look at in a moment, you could trade multiple markets. For an example, it'd be you could easily trade the ES, the CL, the black gold, and the NQ at the same time. And the reason you could do that is you're not going to get as many 34Bs as you will, for an example, for T25s, which we'll have a look at in a moment. So become a specialist. That's where the big dollars are. Now personally, those of you that know me know that I'm a scalper and I focus on one market only. Either I'm trading the NQ, or nowadays because of circumstances with some clients, I'm mainly focusing on the ES. Become very good at one market. You get to know its personality, and traders, just like the market ES, CL and NQ and FX, they're all different. They all behave differently. So over a period of time you do get to know their individual behaviors. Now, just before we get on with this, if you haven't already subscribed to my channel, please do. Likewise, if you don't have my ebook or even my program, please go to my website. And of course, for $197 traders, you get what is probably the world's most comprehensive trading program now for $197. And if you trade with NinjaTrader, TradeStation, I also include all of my personal indicators, and I think we've now got them all finished for Thinkorswim, and I've got a number of the indicators also done for thanks to some members for MT4, so I include those at no extra cost. Before we get to the charts, of course we need to understand the risk. If you haven't already seen one of my disclaimers, by law I'm required to put this up. Of course, all trading carries risk. You need to gain the right education before you start trading. So moving right along, just before we go to the charts, a couple of things. First of all, this is a comment from one of our members that kindly has done a lot of testing, but the comment he had here was, whoops, we just had a fill on an order, which is nice. We'll have a look at that perhaps in a moment. And the comment here he's got here is trading the 34B like a monkey. In other words, just taking every 34B setup. Now what's interesting, over this time period there were 288 trades, 84% were profitable. One of the most common questions I receive is, what's the win-loss ratio? How profitable are your traders? Well, look, every trader is different, but where this is a great example, there were mechanical rules set in for this particular setup, the 34B, 84% profitable. And if you know statistics, if you take 288 trades and 84%, that's a really good number to test a theory or a strategy. And of course we've got traders doing very well out of a 34B. Another thing which comes up regularly, and I'm actually for those members that are watching this video, I'm going to actually be covering this in the new T20 recording that I'm doing tomorrow. So it's the Tuesday the 17th down under. I'm going to be doing this new recording, an update for you all on the T20 and the T20-1, just a recap and some questions that have come up from that. Now, a big thing is I am a scalper. I've been scalping for years, and what a scalper does, we're in and out. And I love this statement, you know, get in, get out, get paid. And you know, I had a member ask me yesterday, why don't you go for 21 ticks, 30 ticks, etc. And really, it's a real habit. It's a real hard habit to break when you scalp, because you're in and out. And you know what, it works for me. So whatever works for you. And likewise, traders, if you're already a trader, the important thing is, and if it's working for you, don't stop what you're doing, but the strategies that I teach you, you'll be able to implement and probably improve what you're already doing. So let's go and have a look now at some charts. What we're looking at here is the 233, and this is a common question I've been getting from the general public, is what time frames do I trade? Well, we have two main markets, of course. We've got the New York session, then we got the after hours market, the Globex market. So I'm dropping my time frame down to about 25%. So during New York, I like to trade the 1000 volume on the ES. As I mentioned earlier, sometimes the market runs too quickly, so I'll just set aside if it is moving too fast for me. But during the day, Globex, the after hours market, so once New York closes, traders, there's some fantastic trading opportunities in the market. Actually, what I'm going to do is just turn my trades off. I don't want to distract you, but just before I do turn my trades off, this is like a classic T20. So you had a T20 there, T25 near, T25 didn't qualify to here, traders. Lovely T7, you got a T20, you got a T25, you've got a T20 over here, and of course a great pivot bounce. Now, one of the questions I have about pivots, and you can see here we've bounced around the pivot up here, and I've had a great pivot bounce. Do you know what? I still haven't worked out a way of flawlessly trading pivots. For me to take a pivot entry, I want to wait for one of our other entry signals, such as we can see here we've got a counter trend T1. That's really important. But let me just turn this off, because I want to not distract you on my personal trades, but really just talk about trading opportunities. Now, what we're looking at here is the market during New York, and you can just see here the 233 flies. There's that many transactions, it's untradeable. However, traders, when Globex opens, the market closes for about an hour. See here a beautiful big drop in the market yesterday, and there are just so many opportunities. I love the Globex market. You've got basically these are 34Bs, or these let me just disable this one here. So you've got 34Bs all over the place. You've got T7s, you've got a lovely T20 there. What's really important, of course, is these are mechanical setups. And the little comment I wanted to make here was, remember, less is best. That is, these indicators down the bottom, over a period of time you'll become less reliant on indicators. In actual fact, you know, if anything, they're distracting. And one thing I wanted to point out was this: for our counter trend traders, you had great divergence there. You just bounced through a pivot, so you got great divergence. You've got a higher high, all the signals, but then of course comes down, you get a 34B, then you get a double top. You know, and why this is rising, of course, what's happening to the newer traders, you're breaking out in a cold sweat. This is a problem with counter trend trading. Now, as much as it ended up being a lovely trade in the end, you know, wait until you're consistently profitable as a trend trader, because trading with the trend, look at all these trades. And the saying I have here, traders, is this: follow the gold, follow the 34. Let's go and have a look at the ES 1000 share bar. So what we're looking at now is yesterday's price action. And remember, traders, that yes, you will have times of chop during the day. If you have two stop outs in an area of congestion, I recommend you sit back and you wait for a whole new T20, a whole new trend to start, and then you'll get these sweet spots. Okay, so you had your T20, you've got your 34Bs, you've got of course T25s in here, you've got T25s over here, 34Bs, 89 bounce. You get these every day, every market. You'll get these sweet spots. This is what we're waiting for, and this is a point that Ricardo made. That is to make sure your 8's under the 34, your 34's under the 89. We've got momentum, we've got angulation or angling, that is our moving averages angling. And after a period of time, if I was to remove the indicators down the bottom here, you can read the price action straight off the charts. It's all you really need. Now, getting back to price action, I want to quickly talk about the NQ. We have many traders trading the NQ, and the NQ is a fantastic market. And let me just change one thing here. During Globex, I'll drop the NQ down. That is during New York, and I forgot to mention this. During New York, I love to trade the 133 tick. Once again, my speed rule comes in. If it's moving too quickly, I'll sit it out and just wait for the market to slow down. Because what tends to happen, of course, if you've got a runaway market, I know momentum may be behind you, but of course that's where you really get slippage and poor fills. So you really want to watch that. And what we can see here is during the Globex session, you get still some great trends. We've seen here on the NQ during Globex today, as an example, there's only been 7,000 contracts traded, and this is the 55 tick. So during Globex, I like to trade the 55 tick, and during New York, I like to trade the 130. And I quickly put the sound on hold. I was about to swap charts. I'm not sure if you heard me say that, but I trade the 133 during New York. So what we can see here now, I've pulled the 133 up, so you can see for the after hours market there's not too many candles. But of course during New York, look at these trades here once again. Look at those 34Bs, 34B, 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 34B. You got T25s, you got nice T20 up there. So an absolute ton of trading opportunities. So where is the danger, traders? It's chop. That's what you've got to watch. And as soon as you start to see your long-term moving averages, and even the short-term, I should really just say, all of your EMAs converging and horizontal, that's the area you want to sit out. And that one of the greatest challenges that traders have is waiting for the MAs to agree. That is your 8 under the 34, waiting for those trends to confirm. So the NQ133 is a beautiful market to trade. And where am I going to put my stop? So let's just say here, if I entered this 34B, I want to see it ideally 2 ticks above, 2 ticks above, 2 ticks above. So above these little swing highs that we've got. Now, what if my stop is greater than 14 ticks? So on the NQ, I really, and this is a question that comes up daily, what is my stop loss? On the NQ, it's 133. It's a maximum of 14 ticks, traders. Now, sometimes in a runaway market, you technically might need an 18 tick stop because the market has moved that quickly. Well, because we are momentum traders, I believe your best thing is to still just run with a 14 tick stop, unless you're going to have a much larger profit target. And of course your profit target is going to be on a minimum basis of 1-to-1, so you're going to be targeting 12 to 14 ticks, going to break even at 11 or 12 and targeting 14 ticks as well. And remember, traders, your best opportunity for profit is after a T20. Why? Because remember, a T20 signifies a new trend. So let's go and have a look at the black gold. So what we're looking at here, traders, is CL, that is oil, of course, during the Globex market. So during the Globex, I like to drop down when normally I would trade a 350 volume down to an 89. So what you're looking at here is today's price action, or actually it's yesterday's, my apologies. No, it is today. Sorry, let me get this right. It's today's price action, and we can just see there's just a ton of trading opportunities. But please remember, if you haven't traded oil, make sure that you, did I say gold before or oil? I might have said black gold. I hope I said black gold because it's actually oil. It can be really spiky. It can move very quickly, and we see some fantastic volume. As an example, today with the ES during the Globex market, there's been 61,000 contracts trade. With oil, there's been 27,000, and it can be very whippy and move very quickly. And of course, what we've got, I think it's tomorrow or Thursday, we've got final day, I think is Thursday, we've got the monthly rollover date for the contracts expiry dates. So we'll probably see some real movement in the market tonight. And of course, tomorrow we've got the inventory reports coming out. However, the day traders fast track strategies work an absolute treat. 34 Bs, 89. Now this is the area you want to start to watch when you start to when you're not getting any more higher highs. This is where you're starting to see the market flatten out. Of course, you want to watch that. And what are we going to wait for? Ideally a T20. Okay, and you can just see oil after hours trends beautifully. Let's go and have a look at the 350. Now the 350, this is the total day's action so far. You had a 200B, you've got a 34B, but if we then go and look at the New York price action, of course it's all over the place. You've got trading opportunities, but this is what I mean here, where you see these areas here. Notice how your 89, your 200, what you want to do if you end up with two stop outs, you want to sit it out and wait until you get a new significant trend. Because I had one trader email me today about this. He got chopped up badly. Maximum, I recommend anyway, a maximum of two stop outs, and you sit and wait for a new trend. Because as with every market traders, you get your sweet spots, and this is where you make up for those losses. But what you got to do, of course, remain in the game to do that. Let's have a look at one more market very quickly. Let's look at the Forex. What we're looking at here, traders, is the 5 range on the euro dollar. The rule of thumb is follow the gold. Where is the gold going? We're in an uptrend. Follow the gold. You're going to be a trend trader. Every time you get a close back over the 8, if you're above the 8, we're going to above the gold, you're going to go long. You're going to stay long. Once again, you've got your T20s, you've got 34Bs, 34Bs, you've got T25s. The same strategies work on all time frames and all markets. So if we can look at, and we can apply, of course, tick bars. Some traders love tick bars on the Forex markets. Okay, you've got your 89Bs. Where's your stop going to go? It's going to be tucked down under your little swing lows. One great thing about trading Forex, which I really love, it's a great technician's market, is these extremes that you'll get. Is that in some ways pivot bounces work better to some degree on Forex, in my humble opinion. Now I know for the pivot traders you're going to strongly disagree. Once again, horses for courses. But you look at this gapping away, what I call is gapping away from your 8. These provide some great counter trend trading opportunities once you master them. So one other thing I want to mention, traders, which is really important. So we've got viewers from all around the world watching these videos, and of course members from all around the world. And I received an email just this morning. I've been traveling today, so I got back late this afternoon, but this morning I received an email from a member who was trading with a broker where on their platform to trade the NQ there was a spread, and I think it was about 5 ticks, which is $25. Traders, if you run with a US regulated broker, say AMPS and or TradeStation or NinjaTrader, you should be paying only between $3.50 and a maximum of $5 round turned per contract you're trading. and this gentleman, his broker was charging him basically $25. So on the futures contracts, there should be no spread, and they all should be straight through processing. So if you're with a broker that's charging a spread, the difference between your buying and selling instead of a flat commission, traders move away quickly. Because his comment was, and I think I've got it right here on the screen, was if you could have a second, please advise what spread TradeStation charges on the NQ. I'm trading NQ of my broker, and the spread is killing a lot of trades that would have been profitable. And by the way, Roman, thank you very much for sending that in. And the screenshot of a spread was 5 ticks $25. And of course, if you're only averaging 14 ticks as your profit target, which is $70, of course there's 1/3 of your profit gone out the window. So please be very careful there. So traders, look, I've covered a lot of bits and pieces here. The point is that the day traders fast track strategies work on all markets, all time frames. There's just a ton of trading opportunities. Become a specialist, focus on a market. If you don't have my ebook, please go to my website. If you don't already have my program, please invest $197. It'll be the best $197 you ever invest in. And of course I give full email support, and most importantly, if you haven't already subscribed to my channel, please do. Thank you, traders.